Hey, what's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Decoded. This is our video detailing specifically how we use the 920 trading strategy, the 920 SMA, simple moving average, to trade options. Now, you can trade options, you can trade futures, you can trade crypto, whatever instrument you are trying to trade, you can use the 920 SMA crossover strategy. Folks, it doesn't matter. Now, if you haven't already, please go ahead and check out the video on trading rules. Now, these are the trading rules, or as I call them, laws, that I use. Now, the preference should be to develop your own rules or trading laws for your specific style of trading. But go ahead and use mine if you'd like. Use mine, add to those, subtract to those, however you want to do it. Now, again, folks, remember that your trading process, specifically to you, must be written down. So if it's not written down, it's not a process, folks. But again, feel free to use ours. Again, it's the 920 trading strategy. Everything is right here, folks. Now, if you are interested in learning more about this or seeing this in action, head on over to our live trading Discord. It is available. The link is down below. It's called Trading Decoded. And we trade every single day from bell to bell. So go over there and check it out. We're going to give you that first week for free. If you like it, great. If you don't, hey, we understand that as well. But let's get into the actual trading strategy. So I guess before we do that, let's talk about the why behind using the 920 trading strategy or the SMA crossover strategy. Well, it generates buy and sell signals in the market for us. Now, obviously, every successful strategy is built on the principle of support and resistance. As a 920 trader, essentially what we do is we use the higher time frames to generate signals, basically buy signals out of, let's see, demand zones down low and short signals out of supply zones up top. So that is what we do. But let's talk specifically about the different ways you can trade the 920 trading strategy. And again, there are several different setups within the overall trading strategy. There's the conservative setup, the aggressive, more aggressive, and the double cross. So let's talk about that conservative strategy first. The 9, again, the 9 SMA, 9 simple moving average, must cross to the upside over the 20 SMA. Pretty simple, very, very self-explanatory. After the 9 crosses the 20 to the upside, we're going to wait for that first green candle to close. Now, once that first green candle closes above both the 9 and the 20, after the 9 has crossed the 20 to the upside, we put on the play. Now, we pay close attention to what the candles are doing relative to the 9 and the 20. And the levels that we have set in pre-market are always going to be very, very important. So those levels, and I did a video on that here a couple weeks ago. Check the site, check the YouTube site for those specific areas. Now, again, generally speaking, folks, your best plays are going to come directly out of demand zones. And for demand zones, I use 30-minute double bottoms. So why 30? And it's just the bodies. Now, there is information in the wicks, but I choose to use the bodies of the candles only, and it works very, very well. So essentially, we set those up in pre-market. And again, there is a video on that. Just go ahead and look at the site. There is a video on that, how we get our levels. And then the expected value of every single play. Now, let me see. The levels that we set in pre-market do become targets throughout the day. Now, why do we use the 9? Well, as you can see right here, the 9. We use the 9 as support up to our next target. Now, remember, folks, every successful trading strategy, or most successful trading strategies out there, are based on simple support and resistance. The 9 right here, the 9, we use that as support to our next target back to the upside. In other words, we ride the 9. The 9 lags behind price index or price action just a little bit. But again, folks, trust what you are seeing on the 9. Trust it to get you to that next level. If it doesn't get you there, hey, take yourself out of the trade. Now, if we get to our initial target with relative ease and the candle closes above our target, we use that level as support until the 9 catches up to the price action. It's pretty simple. If we have a target up here and we get directly through that target, if a candle closes above that target, great. We're going to use that as support. That becomes our support until our 9 catches up to us. Now, once the 9 catches up, again, we're going to use that as support to our next target. Now, let's see. Once the 9 breaches that level of the upside, we again use it as support to the next level. If we fail to make it to the next level, and once the first red candle closes below the 9, it's time to cut the play and take your profits. Why? And again, that's why we use the 9, folks. Our 9 is our support up to our next target. And once it breaches support and closes below the support, you know that play is over. Now, let's talk about the aggressive strategy on the 920. The aggressive strategy for the strategy for opening is the same thing as the conservative strategy. The only difference is you don't close the trade when the first red candle closes below the 9. Instead, you wait for the 9 to cross over the 20 in the opposite direction. Now, folks, I'm telling you this, if you are using nothing but the 1-minute candles, you're going to see a lot of really, really nice trades turn really, really badly if you wait for that 9 to cross the 20 back to the downside, unless it's one of those where it runs for a couple of hours. My recommendation to you at that point is to switch time frames. Look at a 2-minute, 3-minute, 5-minute for trend confirmation. But again, you can. That is an aggressive way to play the 920 crossover strategy. If you're using it for something like regular equities, so shares and not options, that's fine. You're in good shape. Now, if you're using that aggressive strategy for options, the problem is you have something called theta. It's the time decay of money. So your options are working against you the minute you put on the trade. So we would rather use targets and then get to your target and take the trade off if it doesn't get to that target and hold hold that target for support. Now, the most aggressive strategy essentially is the strategy for opening a position differs from the conservative strategy in that you open the trade when the 9 closes above when the candle closes above the 9 and below the 20. It's this candle right here. Now, we call this a fishtail play. This is a fishtail play. Now, what you see here, this line right here happens to be a pre-market line. Okay. We love these plays right here. So you get a pre-market line right here. This is going to be a pre-market demand zone, this line right in here. Pre-market demand zone, you get a candle that comes from the upside, closes inside the 9. So it's above the 9, inside this demand zone right here, but below the 20. Again, this is a very, very aggressive way to play it. But it is, in my opinion, the best way to play the 920 crossover strategy. Essentially, what you can do is you can forget about your 20, at least for a few minutes, okay? And just trust that 9 to take you up. Because again, folks, this is a demand zone. A demand zone is nothing more than an area that in the past said, you know what, at this price level before, guess what? Something happened to push that price back to the upside. There were buyers here. And the buyers felt, you know what, this is a good time, this is a good deal for us to take a position to the upside. So it became a very, very strong demand zone back, from the downside back to the upside. So again, this candle right here, it's my favorite play out there, folks. It's my favorite play out there. So put on that trade right there. Now, closing the trade, you can use either the conservative strategy or you can use the aggressive strategy for closing out the trade. Either one is fine. So, and you can mix and match. You can use conservative entries, aggressive entries. You can use conservative entries and conservative exit. It just depends on your style as a trader, how you are going to trade that specific style or that specific trade. And again, you can mix and match those. I'm a conservative yet aggressive trader at the same time. Okay, if that makes sense. Okay, now calls long, and again, this is called the fishtail. So if you're in my live group and you hear folks talking about the fishtail is the space between the 9 and the 20. That's all it is, folks. So don't get confused and think it's something that it's not. It's just a space because every now and again, it looks kind of like the tail of a fish, hence fishtail. Now, We have something, and again, I coined two terms. I didn't come up with the 920 strategy, folks. I take no credit for that whatsoever. But what I do take credit for is two different terms. Number one, I take credit for the fishtail term. That's my term. The second thing that I take credit for is called the double cross. Now, the double cross happens to the upside when you open below the 9 and close above the 20. That is a double cross to the upside. Now, here's the beauty of the double cross. If you get a double cross that happens directly above a demand zone, again, to the upside, those are really, really, really nice plays. If you are below a demand zone, you get a double cross, I would wait, wait until you get that cross to the upside through that demand zone. Because again, if you're coming up to a demand zone, you're probably going to use that as resistance. So you got to get through that resistance first. That's why we like our plays. Generally speaking, we like our plays. We like our crosses to the upside directly above the demand zone. So again, directly above that 30-minute double bottom that has been established or had been established sometime earlier. But that's how we play it. And again, the double cross, you can close out your trade anyway. You can use a conservative strategy. You can use an aggressive strategy. Now, what I like to do once I get into a trade, folks, I like to switch time frames because there's nothing worse, in my opinion, than sitting around and watching 1-minute candles all day. Now, this is just my opinion. Feel free to trade however you want to trade, but I take my entries on the 1 minute. Why do I take them? Because I get more precision entries on the 1 minute than I do on a 3-minute, 5-minute, 15, or a 30. And I trade nothing but 0 DTE. So everything that I trade expires at the end of the trading day. So I want the best entries that I can get. So I get those, generally speaking, on 1-minute candles. Now, once I'm in a trade, once I get into the trade, what I'm doing is I'm looking at the 3-minute, I'm looking at the 5-minute, 15, and 30 for trend confirmation. Now, throughout the day, I have targets. So let's say I take a long position, so calls directly out of a 30-minute demand zone. So what am I looking for? I'm looking for potential resistance or potential supply zones up top where at some point they've sold shares. So that's what I'm looking for, folks. But again, once I get into that trade on the 1 minute, I'm going to switch time frames to the 3-minute, 5-minute. I'm always going to watch that 15 and 30 again for trend confirmation. And again, there's a lot of information in wicks, but I choose to use the bodies. Now let's talk about the puts. Puts are just the opposite, folks. So for puts, back to the downside, what we want the 9 to cross the 20 back to the downside. And the first red candle that closes, once we get that cross to the downside, that signals our entry into puts. It's right here. So we get the cross, and then we get this first red candle that closes. This is our entry. Folks, it's just the opposite of the call strategy. So remember the calls, you get that cross to the upside, then that first green candle that closes after the cross, that is your signal to get into calls. It's the opposite for puts. You get the cross to the downside, then the first red candle that closes, that's your signal to get in. Now, again, just like the call strategy, the conservative strategy, when do you get out? Well, you get out when you get a green candle that closes to the upside. So you can take that. Or again, now, if you want to get if you want to get more aggressive, you can wait to reach the 20 to the upside. I mean, we've got the 20 here. Or what you can do, again, is you can switch time frames. And again, I'm a big believer in switching those time frames. Okay, so that's the conservative put strategy. Now, the aggressive strategy, it's the same thing from an entry standpoint. So we're going to wait for that cross to the downside. First red candle that closes after we get the cross. That tells us to put on the trade. And folks, generally speaking, I wait for candles to close. I don't like to get into those trades and then have it reverse on me. And the best way that you can ensure that happens is to take a position while the candle is already printing. Unless you're just looking for a quick scalp, in and out, 10 seconds, 15 seconds, something like that. And generally speaking, I'm not. I like to hold on to my trades, so I'm looking for trend confirmation. But again, the most aggressive way to get out of your puts is going to be wait till that 9 crosses back to the upside. And again, since we're trading 0 DTEs, this can be a dangerous proposition depending on where you are and depending on how long that's been running. If you have a good distance between your entrance and your target down below, so a demand zone down below, or any kind of support that you see on a higher time frame, and let it run just a little bit. But everything is going to be dependent on how far your zones are away from each other. That's essentially going to determine what type of strategy you want to use for that. Now, the puts, what are we doing for puts? We're using the same thing, the more aggressive strategy. Again, it's like the call strategy. Remember the fishtail. So we got the fishtail back to the downside. Okay, so you take that position. You know, when you get a candle close between the 9 and the 20. So again, just like this right here, your candle is closing below the 9 but above the 20. Now, what you must always look out for, if it's a cross to the upside or across to the downside, is the 20. So you get the 20 right here that will act as support a lot of the time. So make sure you can get through that 20. Now, again, what we like to do is we like to take our position directly out of a higher time frame supply zone up top. And again, I like to use, I use a couple of things. I use pre-market high. I use 30-minute double tops, 15, depending on where they are on the chart. But again, higher time frames to take my entrances. Now, one of the reasons, probably the biggest reason why we want to use those higher time frames for entrances is, well, a couple of things. Number one, something has happened there in the past that either pushed it up or pushed it down. And number two, guess what? We can predefine our risk very, very easily if we take a play directly out of a major time frame. So a 30-minute double bottom, 30-minute double top. Again, demand zones down low and supply zones up top. And again, these are just my opinions, folks, but I've been doing this for a while. And so, again, back test. Okay. Now, just like back to the upside, folks, we had that double cross to the upside. We have a double cross to the downside. And again, a candle that opens above the 9 and closes below the 20. Same candle. This one right here, folks, this is a double cross. So this is a double cross to the downside. You've got pretty close to a double cross to the downside over here, but we opened below the 9. Okay. And again, with puts, you can use any strategy. You can use a conservative strategy to get out. You can use an aggressive strategy to get out. You can use a cross to the opposite side. But again, folks, trust your trend confirmation. Look at that 3-minute for trend confirmation. Look at the 5, 15, 30. But always be aware of where your higher time frame support and resistances are. So that is the 9. That's how we do it, folks. That is how we execute. Now, as with any strategy, there are nuances, folks, and those nuances, it takes time to get those. It takes a lot of time. It takes a lot of effort. And quite frankly, it's more effort than most people are willing to put in, folks. In order to get to a specific or a high level of trading, it takes a lot of effort. And again, most people are not willing to put in that effort. It's painful. It's very, very painful because it forces people to get out of their comfort zone. But again, folks, that's where the magic happens. The magic doesn't happen here. The magic happens on the outside. That's how we do it. Now, I will tell you this, folks. If you're interested, we do live daily trading every single day. So 5 days a week from 9 o'clock Eastern time until the closing bell every single day. So if you want to see this in action, come on over. We have a live trading Discord. It's called Trading Decoded. The link for that is down below. So come check it out. We're going to give you that first week for free. If it is something that is of value to you, then great, stick around. If it's not of value to you, then hey, don't stick around. There's no harm, no foul. But again, come check it out. We would love to have you. And again, head on over to 920trading.com for this entire strategy, folks. It is all there, and plus a whole lot more. But hey, thank you for spending a little bit of your time with us today. We appreciate it. Feel free to come back and reference this video, and feel free to send me comments. We always appreciate the comments. I respond to every single one, folks. Every single comment that is made on these videos, I respond to every one. But again, thank you for spending a little bit of your time with us today. We appreciate you. Have a great rest of the day, and we will see you in the markets.